So it may seem like a silly question, but sometimes we hear the question, what is investment management? And that's actually a pretty good question. Investment management is simply taking your resources that you have for investing long-term and determining how to allocate those investments. And so when we think about asset allocation within investment management, there's probably more conservative would be like the S&P 500, which is 500 largest companies here in the US. The next thing on the risk spectrum could be foreign stocks, large companies overseas. Then maybe a little bit more risky than that would be mid-cap stocks or mid-sized companies here at home, small-cap companies here at home, and then we get into emerging markets like Brazil, Russia, China, and India. These are all, that asset class is much more aggressive are much more volatile, which could also mean higher returns potentially. I'm not talking about any current events. I'm just talking about historically, these are different risk spectrums. And then you have very conservative short-term bonds like US Treasuries that mature in 3 years, 5 years, or 10 years, or 30 years. And then beyond that, you have corporate bonds, and you have high-yield corporate bonds that almost behave like the small cap stocks in their volatility. So you look at all these different areas that you can place investment, and you determine what's the highest rate of return I can get for the least amount of risk. Or you might determine what's the highest rate of return I can get for a given amount of risk. So if you're retiring, you may not be 100% stock. You're probably going to be 60 stock, 40 bonds, right? So what's the optimal rate of return that we can build inside a portfolio using the tools before us? A couple of things I'll note. One is investment management should always come after financial planning. Financial planning starts first, and then you start with investment management, because you have to set goals first and understand what the big picture is and what the needs are. Sometimes people come in for investment management that don't even need to have investment management. They need to get rid of debt. And so you have to think about things in the big picture. Any financial advisor who's not doing that essentially just selling you product or collecting a fee or a commission, and they're moving on to better themselves, but not necessarily you. So always do comprehensive financial planning first, and then that will set your strategy for your investment planning. When it comes to investment planning, annuities, whole life insurance, none of those products should ever be a part of investment management. That's asset protection in some cases. Annuities, in my opinion, never check any box. They just don't make any sense when you have very tax efficient investing through direct indexing now, or even ETFs are just as efficient as some annuities in the end after you've passed away and all the taxes are paid after your death. If you have any questions, make comments. I'll be happy to comment back in the comment section below. Thanks.